Hey everyone, it's Paul here. This is my first video in November, and what I'm going to try and do is one video per day, 5 minutes or less for 30 days. So for the entire month of November, it's a challenge. I feel like I need to challenge myself, so I'm doing a couple challenges. Some of them are for my physical well-being, such as having a dry month. Others are doing the 30 videos for you guys. So I'm going to feature one of my ETFs every day for 30 days. So we're already 30 seconds into this video. Let's get into it. All right, guys. So I'm starting off with my largest position. This is the Harvest Diversified High Income Shares ETF, otherwise known as HHIS. They have already reached $1 billion in assets under management, which is amazing for a Canadian company. Let's skip the overview and let's go to the fund focus. Harvest Diversified High Income Shares seeks to provide high monthly income and growth potential from a portfolio of Harvest single stock ETFs that use a covered call strategy. As of March 31st, 2025, the underlying ETFs in this ETF employ modest leverage to create overall leverage exposure of approximately 25%. So guys, basically this is a fund of funds. You can see up here, the ticker is HHIS. The distribution has been increased from 25 to 26 cents. The NAV is currently 1402 and at market close to 1402 as well. Management fee is 0% because all of the underlying ETFs have their own management fee of 40 basis points. So the advantages to having something like this is diversified exposure to top trending companies, stocks and higher monthly income. It's a Canadian trust unit, so we can buy it in Canadian dollars. We don't pay the 15% on the distributions. It's tax efficient. It's a one-ticket solution with lower purchase price to access the underlying ETF holdings, exposure to underlying ETFs with modest leverage, high income in Canadian dollars. So let's take a look at what this holds, and this is the reason why I bought it. Instead of trying to pick and choose which one of these companies I want to invest in, I let Harvest pick and choose which ones they feel are best suited for this fund. You can see we have Apple, Coinbase, Broadcom, Nvidia, Palantir, Netflix, Microsoft, MicroStrategy, Meta, AMD, Amazon, Tesla, Alphabet, Costco, and Eli Lilly. Sorry, for those of you who don't know, Harvest announced new Harvest Enhanced High Income shares. So basically, they have launched 4 more in their suite of high income portfolio. So now we're going to be able to buy Circle with the ticker CRCY, Reddit, which is RDDY, Robinhood, which is HODY, and SoFi, which is SOFY. And I believe that all 4 of these are going to be added into the HHIS portfolio, although it doesn't show it on the website as of today, which is November 1st. Now, guys, I made a chart just to show you my position. I have a total of 4,710 shares of HHIS. I hold them in 3 different portfolios. So 2 of them are my tax-free savings account. One of them is my RSP. You can see my average costs, $11.50, $12.37, and $11.46. So I'm well in the green on these at the moment. You can also see all of the dividends that I've been paid. So then down here at the bottom, you can see dividends plus current equity. So I'm up $18,885 on this position, which right now is 34%. It's amazing. All right, guys, we're getting close to 5 minutes. So just to sum it up, HHIS is a fund of funds. It's a Canadian listed ETF from Harvest. I really like it because this is holding the biggest and best companies that the US has to offer. And we are getting a monthly distribution, 25% leverage. They've just recently increased the distribution. Our yield, the yield now at $14 is a little bit lower than it would have been had you bought it when it was launched. It was originally supposed to be 25%. Guys, I'm getting close to that 5-minute mark. I'm trying to think if there's anything else you need to know about HHIS. For me personally, it makes up about 15% of my portfolio. It's my second largest payer. Will I add to this position? Yes, I will. I want to bring my position up to 5,000 shares. I do like, rounded numbers like that, but I'm not currently buying because I want to wait for the next correction. If the correction comes, then I'm going to buy more shares. So I am trying to be patient with this one. Anyways, guys, we've definitely passed the 5-minute mark. Quick reminder, this is not financial advice. And tomorrow I'll be talking about another one of my ETFs. It's not a harvest ETF, but it's my second largest holding. All right, guys, until then, bye for now.